Hello and welcome to the KE Report. Chad and Corey here, getting an update from Dave Erfle, also known as the Junior Miner Junky. Runs the juniorminerjunky.com, and we will put a link to that down below this interview for everybody to follow along with his work. We were having an interesting discussion off mic, and Corey just decided to go ahead and start recording the pre-call banter, as we call it, and just jump right into it without really having a set call structure, but just discussing the market. So this is just three guys talking about the junior mining sector, the breakout in gold, and we get into more of a structured call as it goes, but it gives you kind of a more behind the scenes feel for how we look at these markets.
Well, I know. Look, gold's at 2,200. It continues to move higher. It's a strong gold market. It's a strong market for a lot of things, but share price wise, yeah, there's so much room to do on the upside.
Yeah, yeah, we just don't see the retail buying coming in just yet. A lot of this is short covering, and the volume is decreasing as GDX and GDXJ are going higher. I don't like to see that. And you've got what? You've got the gold price now that is extreme overbought on a weekly basis. It looks like it's going to close near 70 RSI, the gold futures, and yet GDX and GDXJ are still below 60 RSI, which has capped minor rallies in the past. And like I said, the volume's sinking as it goes higher. So that just tells me that you're not seeing investor buying really start to come into the sector just yet. I think a lot of this is short covering.
Well, don't you think, Dave, that with the highest weekly close on record ever in human history, that at least more generalists will be waking up to the idea that, hey, there's something going on in the gold sector. They're probably not going to pile into juniors anyways. They're going to pile into the ETF. So is that at least encouraging the weekly close we're having?
Absolutely. When we had that last week, though, we had an all-time high weekly close at 2095 last week. So, and looks like it's the weekly close is going to be close to 2200 this week. But yeah, I mean, and look at silver too. Silver still is not really, doing that much. It can't even get over 25. So, I mean, the stock market needs to roll over, Bitcoin needs to roll over, and these people need to start getting a little nervous about, the stock market being way overvalued and due to correct for them to start looking for some hedges, I think.
Dave, to your point about those overbought levels, like I do see gold, at least futures wise, that is overbought on a daily chart. I'm seeing RSI over 80, 82. But GDX, GDXJ, those are close to being overbought on the daily charts. I'm seeing RSIs at 66 and a half for GDX. So they are making a run there, but yeah, they're not quite overbought, but couldn't there be more upside then since gold is so overbought?
Oh, sure, there could be. But like I said, we need to start seeing the gold stocks going up when the gold price corrects this huge move, right? So I think that you're going to at least see 2100 tested before gold starts moving higher again.
What about 2000? Just 2100? That's only 5%.
Yeah. I mean, 2000, I think 2050 maybe, but I don't think it's going back down to 2000 again. But, you never know with the gold sector. But I think at the very least, 2100 is going to be tested. Let's see what the gold stocks do when it is. If, when once you start to see some profit taking in the gold stocks, are you going to see some value-based buying coming in and buying that weakness?
Well, Dave, when you talk to your subscribers, how will you be messaging to them? Because we had somebody on the show yesterday that mentioned we may see that corrective move back just to retest the breakout, which is normal technical action, but that would be a good spot to be accumulating because after that, if this thing actually does get ripping higher, people are going to start having to chase at that point. So would you be talking to people about, hey, if you're not in position now, when we do see this pullback, this may be a good time to take a look?
Well, yeah, I mean, that's what I've been telling my subscribers anyway, and expecting this move to start accumulate before it happens. But, as far as newer subscribers, which I'm getting a lot of, absolutely, buy on weakness, but still, it's not a technical breakout until we get that monthly close above 2100. That's when you get that momentum-based buying coming in, and that's when you start to see strong moves in the gold stocks, I think. I believe. I believe that's what we need to wait for.
As much as we talk about like these weekly and monthly closes at all-time highs, and that's the momentum, isn't momentum kind of just day after day moving higher, like we've seen with the US markets and even like we've seen with gold now, where instead of reversing right away, it just kind of builds on itself day after day, whether it's a Monday, Tuesday, Wednesday, Thursday, or Friday?
Yeah, I mean, we gotta us take a step back here and take a look at the historical reverence of what is about to take place in the gold price here. This is a historic breakout. And it's coming from a huge cup and handle pattern. It's 13 years. And there's even a cup and handle inside the cup and handle. So I think the cup and handle inside the cup and handle is the target is like 2350. And the initial target for the cup and handle breakout is 2500. But the long-term target is between, I think, 3300 and $4,000 just for starters. I mean, the last time the gold price broke out of a 13-year cup and handle pattern was right below 500. And once it cleared 500 on a monthly basis close, the gold price went up 360% in 6 years. So this is what we need to take a step back and look at the perspective on. And if you take a step back even further and look at how undervalued the gold stocks are in relation to the gold price, that mean reversion is going to be huge.
Well, Dave, if we're taking a step back and looking at it, maybe my glass is too half full on this one. Maybe I'm too optimistic. But when I look at it, I see 2000 as having a floor now as far as support. I see a breakout in gold, and I see volume coming back into some of the mining stocks. I see a lot of mining stocks on my screen up all week long. And to Corey's point, not just at the end of the week, they've been going up since last week. And a lot of these stocks are in the bottom basement dwelling of their price range and in relation to gold. But this is a move where the risk of things in the market is to the upside, not the downside. We're not waiting for a giant washout here. We're not waiting for a 2013 wipeout here. We're talking about gold breaking out of a cup and handle pattern within a cup and handle pattern that can extrapolate up to $3,000. So shouldn't people be getting a little bit more bullish than they even are right now?
Oh, absolutely. I believe so for sure. But I wouldn't chase anything just yet. You don't need to. You can wait for the pullback to, have your watch list ready and wait for the pullback. Plus, there's a lot of these juniors that really haven't moved much. Sure, plenty of them have moved quite substantially, but there's still many quality juniors that really haven't moved much.
Well, a 20% bounce, which we have seen in a lot of stocks off of a washed out level, really isn't much, right? But I guess what I'm hearing you say then is look, most people probably in this sector have been in this sector. So they do hold stocks. So now is the time to simply just continue to hold those stocks. But what about those that have some money on the sidelines that said, you know what, I sold my stocks whenever it might be, and I was waiting for lower prices, even waiting for that breakdown below those October lows, but now that there's been this, let's just broadly call it 20% rebound in some of the juniors, you think that could be tested? We could be moving back down, or it's more just a wait and see what the follow through is?
Yeah, I mean, absolutely. If you're on the sidelines, this is the best time since, early 2016 to start accumulating the best stocks.
Well, it seems like the best time because they haven't gotten moving yet. They're just starting. You hear people say you need to be in because the first 200% come really quickly. We're talking 20% here. So is there that opportunity for the extra 180% to tack onto this?
Oh, I believe so. Yes, and I've been saying that for quite some time. Yeah, because I've been watching that HUI to gold ratio like a hawk. And as soon as it tested the 2016 low at 0.09 and change, I mean that was a screaming buy as far as getting into the best stocks. If you haven't completed your positions, those are the best time to complete them. And now if you're waiting on the sidelines and you're waiting to get into some of these high flyers, I mean, you obviously want to wait for them to come back a little bit because it looks to me like there's probably going to be a correction here because we really haven't had one since the move started last Friday. But I mean, anything could happen in this sector, right? And it usually does. So I just don't like to chase stocks. I've never, it's never been a good result if I've chased stocks. So, I mean, it's always best to just wait for some weakness. But, I mean, there's plenty of them to choose from that haven't really moved up that much. So, getting in, like I said, and like you said, the risk is now firmly to the upside as far as I'm concerned, but we still haven't got that technical close above 2100 on a monthly basis. So I'll feel a lot more comfortable, you know, advising people to maybe chase some stocks that you haven't got into that look like they have a lot more upside once that happens.
Well, Dave, I think it's also a good time to bring up the difference between a bear market playbook and a bull market playbook. Because in a bear market, the corrections can be more severe than people are expecting. And on charts, the signals can get way more buried into the basement than people expect. But in a bull market, the pullbacks are going to be much more shallow. They're going to be much more shorter. There's no shortage of people with cash on the sidelines also waiting to buy that exact same dip everybody else thinks they're going to buy. And so we've seen that in other markets. Once things really start taking off, if you're in AI stocks right now, or what happened with uranium stocks, or what we've seen happen with some of the other sectors in the S&P that just took off, like small caps, people waiting for pullbacks, they're not very long, and you got to be pretty nimble to get in there and catch them. So again, how would you be talking to subscribers about adjusting your playbook from kind of the beat up post-traumatic stress disorder bear market playbook to the you got to be a little bit different in the bull market playbook?
Yeah, and being a little bit different means continue to have patience with the stocks that haven't moved yet. Because, I've been guilty of this in the past and learned from it quickly to where, oh, wow, look, we've got that signal. Everything's taking off here. But look at this dog here. It's not moved. And I did all this due diligence, and it looks like maybe my due diligence was wrong. I maybe missed something. So I'm going to sell it, and I'm going to get into something that's already moved. Well, that turned out to be a big, huge mistake because eventually the stock went up, 4 or 5 times or whatever, and I left a lot of money on the table, even though I did well with the one I chased a little, but the upside wasn't nearly as much. So, patience works both ways. Anybody who's listening to this broadcast has, had to have a lot of patience waiting for this move to start. And you just have to continue to have a little more and not give up on the companies you've worked so hard to accumulate at low prices.
So then what stocks are you watching? Because look, we can pull out a handful of stocks that have done very well over these last 6 days. We can also look at some stocks that haven't moved. But broadly, I would say the majority of stocks have rebounded off of potentially some very low levels that might not be seen again. But what are your barometer stocks here, Dave? Like, what are you watching?
Well, I think it's coming from PDAC, it reassured my feeling of it's all about money right now and access to it's all about how much these companies have in cash and do they have the access to capital. The street is still, leaning on these stocks that need money. And if they need money and they don't have a clear path to capital, they're going to continue to be sat on. So if you like a company's project that is in that position, you might want to, call up management, find out whatever you can about if they've got a clear path to some capital. Because if they've got, multi-million ounce project and they just need money, but it's in a good jurisdiction and there's a lot of gold in the ground and it looks like and a lot of these companies become high margin projects now even at a base case 1850, 1900 gold. So you might want to get on the horn with them and see how they're progressing with getting financing. They can't give you very many details. That's privileged information, but you can get a good sense because there's a lot of these optionality plays with a lot of gold in the ground that are trading at, between $5, $10 an ounce. Nobody cares about them. So if you collect a basket of those, all it takes is one or two of those to really hit, and you're going to do really well.
Well, Dave, that's precisely what I was going to ask you next is about the optionality plays, the beta plays versus the alpha plays, which really have some kind of a catalyst, some kind of a growth stimulus that's going to jump them to the next level, whether that be a drill program or an economic study, a resource update, a production increase, bringing on a new project, taking over a project. So those are the alpha plays. But the beta plays are those optionality ones you just mentioned that have ounces in the ground that are at silly valuations. How are you balancing the alpha versus the beta plays in your own portfolio?
Yeah, and a big thing that everybody is keeping an eye on here is timeline to being fully permitted, right? Because there's only so much time to where they've got this much cash, but hey, they're still a couple of years out before they're going to be fully permitted. But the market needs to know what your timeline to production is. And a lot of these companies that aren't even targeting a permit until for a few years are at least getting it on their website and talking about it that hey, we're planning, we're starting, we're on the timeline to permitting. We started permit discussions. We're getting this together. We're getting the environmental permit paperwork done so we can get that submitted or doing whatever. That's what people need to see also.
So permitting is different than production too. There's a stepping stone there. One of the biggest stepping stones being financing. Something that, look, as you said, everyone's still concerned about financing because a lot of these companies, even if they have raised money in the last year, it's been a pretty small amount outside of maybe a handful or a dozen companies then. But Dave, I know it's gotten so hard for US investors to invest in companies in terms of financings, but undoubtedly we are going to see a lot of financing. So are you going to be a bit more enticed to get into some of these financings that undoubtedly are going to come with at least a half warrant, if not a full warrant still?
No, I stopped participating in private placements, Corey, a couple of years ago. I mean, it's the laws are just too draconian. We have to wait for the legend removal to come off, and the fees are being raised so much that if you're an investor now, and this is good news for your average retail investor who's not an accredited investor, you don't need to participate in private placements if you're investing right now to really upsize your leverage in this sector, because so many of these stocks are trading at perpetual warrant prices already, you know. So it just became too restrictive for me to do it. I just got too frustrated with the process, and I'm not the only one. A lot of U.S. investors I talk to are feeling the same way. And now you've even got this new process for investors to where there is no holding period, and they can get a warrant. So if you're a U.S. investor,
Life financing.
yeah, in these financing. So if you're a U.S. investor and you get into something like that, you still have to get your legend removed. So, if you're outside the U.S., you could sell your shares right away as soon as the placement closes and keep your warrant. You could strip your warrant right away. I mean, I don't like to strip warrants, but if you're investing in a lot of private placements, sometimes you have to. But this is what we have to deal with. So the short answer is no, I'm not planning on doing any more private placements.
Yeah, David, I think it's a great point that a lot of these stocks are so beat up, you're already getting them at warrant prices anyway. So you can buy and sell in the open market and still catch a really great deal right now. I'm going to pivot back to the question I just asked you a second ago, though, because I know we got into permitting, but you didn't answer my question, Dave. Alpha versus beta. How much of your portfolio is in optionality and how much of your portfolio is in looking for some kind of a catalyst?
I'm sorry. I'm sorry. Yeah, I have plenty of optionality plays, but as you know, I've pretty much disregarded the drill plays for the past few years. I'm not in anything that is not at the PEA stage. It has a really nice defined resource. So what I'm going to do once I'm able to take some profit in some of these positions that I'm holding now, I'm probably going to rotate that money. I always bank my profit. What I do is I rotate the investment capital. So I'll rotate more of my investment capital once I start taking some capital gains off the table into some earlier stage company. I've got a lot of exploration companies on my watch list that have either a strategic partner, or I think they got a project good enough to attract a strategic partner to have access to capital. So I might dip my toe in some of them.
Interesting. Okay. Now, what should we be watching for next week then? Or I guess for the remainder of this month? It's so early on in March, but quite frankly, this last week, I think could be very, very, very important for this sector and for all the bulls that have been waiting so long for a breakout and for something to come down to the stock. So, what matters for news, for catalysts, even for individual stock moves as we progress through this month?
Yeah, well, we got the Fed blackout period starting now next week. So there's not going to be any more Fed speak. So the next, Federal Reserve meeting is coming up on the 19th and 20th. So I think what people are looking at is the regional banking crisis, which is heating up. I think that's the reason. I think that's the big reason that sparked this move in the first place. And the Federal Reserve's Bank Term Funding Program, that ends next Monday. And you've got New York Community Bank is in serious trouble. They just got $1 billion lifeline to temporarily save them. But this has got people worried about what's going to be the next bank. And it looks like this might be the one to go into FDIC receivership. And if that happens, the stock market is already trading at all-time highs, and it's extremely overvalued. It's priced to perfection, basically. So, the Fed might have to extend that program, and I think there's a very good chance they will. in that meeting. So that's something to definitely watch out for. And also watch out for the gold price, how the stocks react to the correction here, because there's going to be a correction here pretty soon. If it's not Monday or Tuesday, then it's going to be at some point next week because it's so overbought. But hey, I mean, I know it can get a lot more overbought, but still, when there is a correction, when that inevitable correction happens, we need to watch and see how the gold stocks react. When they start to see some profit taking, will we see some value-based buying come in right away to keep the shares going up?
Okay. Well, Dave, I think you noticed that I hit record when we were talking here because, look, we got kind of right into it. Instead of doing a more formal interview, I decided to record this call. So thank you very much for your insights. This is a little background on what we talk about before we get into recordings. And sometimes the best stuff comes out pre-recording. So this one, you all got to kind of sit in and listen to just what we talk about before we record these segments. And now, well, what Dave is doing within these markets. Dave, hey, man, thank you very much for your time. We'll chat next week, man.
Thanks, guys. Look forward to it.